Hi, I'm Hubert Centers. Welcome to Absolute Wealth's weekly edition of Centers Strategies. Let's take a look at this week's strategy. For this week's strategy, let's continue to see if there's still uncertainty in the market. So as we're looking at the news right now, Asian stocks won rise on China policy optimism, so that's going to be bad for the U.S. markets. China markets decline. China may add stimulus to exports, and that's about it on Bloomberg. Let's take a look at CNBC. EU summit may not calm investors for long. Oh, awesome. That would not be great news. So there's more uncertainty, right? Oil to drop below 100 as EU utopia ends. And then you see down here, Forex investors have been chasing their tails just because the Forex market's been a little bit whippy lately. All right, so armed with this information, what we're going to do is we're going to try to trade the gold market and the crude market because that's where a lot of people are going to go with the uncertainty of the news in the markets right now. So there's one trade that I can teach you in a volatile situation that's pretty standard. It is a little bit more of a risky play, so you have to time it correctly, but as long as you're using stop losses, you should be fine. So let's take a look at the trade. So in this case scenario, we're going to take a look at gold. All right, so the contract specifications for gold is GCG 12. Now this will work in crude. It'll also work in equity. So what we're looking at is it's a drop, a pop, and a roll. So let me use the pen to annotate here. Let me grab some ink here. So it's going to be a drop, a pop, and a roll. All right. So what we're looking for here is we're first looking for a very nice drop in the market, which we have. And the second thing you're looking for is this volume spike. That's your number one criteria. Once you see that, that's the drop. Then what it's going to do is it's going to pop up from this volume spike, and it'll retrace right into a 50% ambush range. Then you can short that and it'll roll back over. So there's actually two really good trades you can do here. As it drops, you're going to buy the volume spike right here, and you're going to ride it up to the ambush zone. You're going to get rid of your long, and at this point you're going to short it up here and let it roll back over. So remember, drop, pop, and roll. So now I'm going to show you how to apply the Fibonacci so that you know where it's going. So for the Fibonacci's, all you're going to do is just grab the Fibonacci retracement lines. You're going to draw it from the most recent drop in market action all the way down to this low. And now you can see from the beginning of the selling to the end of the selling, it retraces perfectly into this area that we want to short at 1699.77. Now this is all fine and dandy to look at in hindsight. I actually did these trades tonight in my own personal account and caught it pretty good. So remember, you're looking for a drop followed by, let me grab the pen again so I can kind of annotate it and show you. So you're first looking for that drop, the volume spike, and the time frame I'm using is a 1 minute chart, so this is more of an intraday strategy, but you can use a little bit longer time frame if you wish. There's the drop, here's the pop into this yellow and red zone. This is the zone that you want to get out of your long, where you're long here, you want to exit, and then you want to start shorting up here for it to roll back over. And usually it'll come back here and retest this 1687 area where it dropped on the volume spike. If it does that, it'll act like a little bit of support and a little bit of a trampoline, and then go through it like a hot knife through butter, and then they'll really turn on the steam to the downside. So remember, drop, pop, and roll over. Drop, pop, and roll. So one last tip when you're trading gold, always keep an eye on crude. So here you can see this is a 1 minute chart of gold. So let me delete this. And now we're going to take a look at just the overnight session here in crude. And you can see crude looks pretty similar, although it's a little thinner. You can see it had the drop, the pop, and the roll back over. A lot of times, crude oil and gold will trade together, so they'll be tightly correlated. Look for when they decouple, there's usually something up there. But a lot of times, believe it or not, they'll trade tick for tick. One will be thinner than the other, and one will be a little bit smoother. But overall, if you're trading one, you need to know what the other one is doing. Good luck, hope it helps, and I'll see you on next week's update.